The recent budget has brought in changes to this in quite a significant way. It used to be that if you start a business, you run a business for many years, and then you keep the business until you die and you pass it on to your children, it can pass on completely free of inheritance tax. It's a very, very tax efficient way to pass on a business from one generation to the next, where all of that value stays within the family and there's no inheritance tax to pay. Um, Now there is inheritance tax to pay. Above £1 million, there is a 20% rate of inheritance tax. So suddenly business owners need to approach it in a very, very different way. Um, if you start a business and then you want to exit that business, whether you're selling your shares or whether you're gifting your shares, you need to consider things like your personal capital gains tax. That's an asset at the end of the day. You acquired that asset when it may have been worth nothing when you started that business, but today it could be millions of pounds now that you built it into a really successful business that you're now passing on. So you have to consider your inheritance tax, sorry, your capital gains tax position. The reality is that the recent change from the budget, where we've introduced an inheritance tax on businesses, is potentially going to completely transform the way we work with businesses. Because where previously you were able to hold those shares until you die and then pass it on tax free to your children, you now have a significant tax on that business. The business needs to be prepared for it, but it also means that people will start to look at different ways of working with those shares during their lifetime.